I'm Greg Hunter. Welcome to USAWatchdog.com. With us today, a brand new guest. He comes to us from Miles Franklin. They specialize in precious metals. He is the media director. His name is Andy Hoffman. Andy Hoffman, thank you for joining us today from Colorado.
Well, thanks for having me. I've been watching your podcast for many years, so it's an honor to be on the show.
Well, it's an honor to have you. A lot of people have been pinging me saying, hey, get this Andy Hoffman guy on. I've been reading your stuff for years. You are a prolific writer, my friend, a prolific writer, and I'm glad to have you on. Last week we had this surprise announcement of negative interest rates. I immediately thought that it will flow down to depositors. In other words, depositors will eventually have to pay, a 0.1% to the banks. Am I reading that right? Is that going to filter down? I mean, I know that's not exactly what they did, but I'm just jumping to what it's going to mean to depositors. Is that right?
Right. Well, essentially that will happen in time, but it was certainly no surprise. In fact, we wrote an article about that back 2 years ago and then another one last year, because inevitably there's only so many tools in the arsenal of a central bank. They can print money, they can lower interest reserve requirements, all that stuff. And now the ECB, like the Bank of Japan, the Fed, and the rest, are at the bottom of the barrel. By instituting NIRP, or negative interest rates, what they've essentially done is to make the deposit rate. So when they lend money out at now it's 15 basis points to too big to fail banks, the too big to fail banks can put the money back in the ECB, but they have to pay the ECB money. So what they're trying to get them to do, because in recent years they just keep the money there rather than lend it, is for them to take it out and lend it. Of course, it's ridiculous because they're not going to lend anything. They're insolvent. That's why the ECB is also reinstituting the LTRO, or long-term refinancing operation, to liquefy banks like Deutsche Bank and Portugal's Espírito Santo that are in big trouble. So essentially what you're saying is, will it get down to depositors? Well, the banks have two choices. Either eat those losses, and as I just mentioned, they're already drowning in insolvency, which is why they need the LTRO, or pass them along to depositors, as they've been doing all along. So yes, I believe at some point in the coming months, you're going to see banks with negative deposit rates. And, what would you do if your bank, which you had fear of to start with, of being bailed in or bailed out, was charging you money to keep your money there?
I would feel like smells like desperation to me. I mean,
I would take my money out.
I had Rob Kirby. I mean, I know you guys sell gold and silver, so I know you're talking your book, but still, I mean, what do you do if you're getting paid negative? What's the cost of carry if you're buying gold? I mean, or silver or whatever. I mean, rich people have to be looking at this like, this is not the economy getting better. I mean, this is desperation. They told us that all these loan, LTROs and all this loan stuff and all this, these tools, they were going to bring the economy back. We've been told it's recovery. Well, now we find out, it's confirmation, there's no recovery. Am I reading that right?
Yeah, well, my favorite thing, you go back to the people who say gold's a barbarous relic, you can't eat gold and all that, and one of their favorite reasons why you shouldn't own it is because it pays no interest. But now, at paying no interest, it's actually paying higher interest than a bank account is going to be paying. So you throw that argument out right away. And, again, look, people are starting to realize, we've said all along about gold and silver, we've written about it, it's not an investment, it's your money. It's the way you used to think of when you put money in a bank. It earns some kind of reasonable interest. Inflation wasn't overtaking that interest. You didn't worry that your bank was going to be insolvent, that you'd be bailed in, or that they'd be forced to bail out with your taxpayer money. But now people going, is it really safer to have my money in a bank? Isn't it safer to just have gold and silver, store it outside of the country, or store it at home, but just don't tell anyone? Get a good dog and a safe and an alarm. And I think more and more people around the world, with announcements like the Cyprus Bell and like negative interest rates, are going to realize that gold and silver are real money. And of course, the biggest proof in the pudding is the soaring food and energy inflation we're seeing around the world, while central banks try to tell us that there's deflation.
Is this I'm going to go back to the negative interest rates. Is this kind of the bell ringing, like it's over? I mean, this is pretty desperate, isn't it? Doesn't this show that things are way worse, and that if it's that bad in Europe, isn't it that bad here in the U.S.?
Well, it's a series of bells that have been ringing for years. And yes, I mean, as I wrote this morning, my article will be out on Friday, that this is a major alarm bell for everyone, a major inflection point, because now the central banks have gone, they've dared go where even the Bank of Japan hasn't gone. which is to take rates into a negative level. I mean, you can't go lower than negative. At some point, you make it too negative, and people realize, one, that it doesn't work, and B, the central bank has nothing left. I mean, let's face it. The European economy, by all quantitative measures, is at its low point since the EU started in 1999, and more accurately, since our lifetimes. We have record unemployment, record youth unemployment, record debt. The comical part is what these countries are trying to do is to destroy their currencies in what I call the final currency war. And yesterday, when they announced this, the euro actually went up against the dollar because people are anticipating that all of the countries, including the Fed, are going to be doing their own QE programs. That's why the Chinese are allowing the yuan to fall right now, why the Bank of Japan is doubling the supply of yen, and they can't even make the yen go down. This final currency war is being fought at currency against currency, but where it's being lost by all the central banks is against items of real value, which is why food prices, to make the most important aspect, are soaring around the world, far more in many cases than even during the Arab Spring.
That's a very good point. The currency war is losing against items. All currencies are losing against items of real value. I like that.
And more importantly, it's items, as I've written many times, that we need versus want. The fact that an iPhone is going down in price doesn't matter because you don't need it. And frankly, you don't need to own a home to live. You just need to have shelter above your head. But this is where the inflation gets circulated around the world with the money printing in things you need, whether it's food, energy, education, healthcare, insurance, you name it. And those things are going up in value. And the more they print, the more they're going to drive up prices of things you need and drive the wealth inequality of the 1% versus the 99% and cause, a further vicious circle of doom.
A vicious circle of doom. Well, take us to the part of doom. When you talk about a vicious circle of doom, everybody on Wall Street last week was like, woohoo, hey, party on. Look at this, negative interest rates, record highs. But I look at that and I think, oh my gosh, are these people crazy? Do they think this is good news? And this is desperation, is it not?
Well, as I've said recently, I wrote a couple of pieces. One of them, the most important, was called the most damning proof yet of QE failure, the fact that interest rates are falling despite the so-called recovery. And that's because the world realizes that the economies, that QE to infinity must come, that the economies of the world are getting worse, not better, that the 1% drop in GDP in the first quarter was not due to the weather. There's plenty of evidence that shows it has nothing to do with the weather. And the same goes for Europe and Japan. Everyone is betting that the central banks must all do what the Bank of Japan just did, what the ECB is doing right now, and what the Fed, the big, when you say what is the end, the big alarm, the biggest is going to be when the Fed, forget what they're doing behind closed doors, they're fake tapering. When Janet Yellen is forced to come out and say, you know what, we got to stop the taper or we got to reverse it because of the inevitability of the falling U.S. economy, that will be the final alarm bell. After that, there will be no way, shape, or form that the mainstream media, that Washington, and Wall Street can pretend that it's anything other than what it is. Failed central bank policy and destroyed economies.
Is that going to be, Houston, we have a problem moment? Is that going to be the moment?
It has to be because, look, right now they're covering up all these things with unprecedented money printing, market manipulation, propaganda, accounting chicanery, you name it. But the fact is, once the central theme behind all of this, remember the dollar is the reserve currency and the Fed is the king of issuing the dollar. The key is that people have to believe that the Fed has some kind of credibility, that there's something left in their bag of tricks. And once the Fed realizes, and when people realize the Fed has used every single trick imaginable, and all they've accomplished is exploding debt and exploding balance sheet and a dead economy with a record low labor participation rate and record high food stamps participation, and people realize there's nothing left they can do other than hyperinflate, that's going to be the moment. And frankly, it's hard to believe that moment is not within, a year's time.
Do you think that comes at this next meeting, possibly? I think meeting sometime in June. That's, later in a few weeks that they're meeting. Isn't that going to be the moment where they have to say either we're going to pause QE or they're going to have to do something overt, is what you're saying? No more behind it. They have to do something overt if the economy is doing.
Yeah, I mean, you never know because they have a lot of accounting tricks up their sleeve. Like, for instance, I talk about these diffusion indices, like the PMI indices, because they mess around with them and they make them look good. The best was Monday when the ISM came out and they changed it not once but twice within an hour because they're saying we seasonally adjusted it wrong, and I'm going, you seasonally adjusted a yes no question. So the point is, they do all the best that they can to try to make things look better. But, when you see today's NFP report where, labor participation plunges again and all of the jobs came from the birth-death model, I mean, at some point, there's nothing left they could do to sugarcoat it. And that's why even the mainstream media is seeing more and more articles where they're not agreeing with the party line. So once the Fed can't any longer get traction with people believing what they're saying, that's when they're going to have to do it. Would it be the next meeting in June? I don't know. Jim Rickard says July. Maybe it's September. But maybe something big will happen in the world that will force their hand. But at the rate that the economy is moving and the debt is accumulating, it's hard to believe that we're not within, I don't know, a year's time. It's hard to tell.
Some people think we're in a few months' time. I mean,
absolutely. It very well could be this summer, or it could be next year, but it's not this thing that's way out years from now.
Well, I will tell you that one of the things I'm hearing is that from Rickards, as a matter of fact, when I had him on, he said, there's one thing that I would tell you about his book, The Death of Money, his latest book. He said that I was surprised at how fast things are speeding up. He was surprised at the speed that with something that I thought would be 15 or 16 or maybe happening this year. So,
well, yeah, it's a Ponzi scheme. Yeah.
How does this work into gold? I mean, Charles Denner was on, and he said that gold will probably hit its cycle low in July. Rickards, some other people think that the price will go down in the near term, but up in the longer term. And a lot of people are looking at July. Why? Or is that not a date for you? Is that not a month for you for a turnaround?
None of their methodologies mean much to me. I mean, look, as you know, I cut my teeth in the gold world with data. I've spent the last dozen years quantitatively pretty much proving gold manipulation and reading everyone else who did.
No, there's no doubt about that.
Yeah, I mean, I watch it every day. Anyone who has half of a brain cell open watching realizes that just like the Dow is supported in treasury bonds by the Fed and the PPT and the Exchange Stabilization Fund, gold and silver prices are horrifically suppressed. So, to look at a chart and say, well, the chart says it's going to bottom in July, or seasonally that's when it does this, means nothing to me. We are in a war, and right now the evidence shows that there's far more paper gold being sold than actual physical gold and silver, and ultimately it's a matter of when they run out of paper. And I could tell you from working at Miles Franklin, we've been around 25 years. No one is ever selling. 90% of our sales are always, 90% of our revenues are always people buying, not selling. And the people that sell, it's never because they think gold and silver are going down. It's because they need the money.
They need some liquidity, they need some cash.
Yeah, they have to pay for something, or sometimes they inherit it from someone who believed and they just don't believe. But it's never someone who is selling. So when you see gold and silver plunge every day when the physical markets close, it's not because people are calling us up and selling gold and silver. It's because the cartel are naked shorting gold and silver on the COMEX and the LBMA. It's that simple.
When do they run out of gold, or are they going to run out of gold? I mean, I've heard that the gold and silver prices will go up when they don't deliver anymore.
Yeah.
When do you think could that event happen this year?
Well, it certainly can. I mean, there's telltale signs everywhere. We see the plunging inventories on the COMEX, if you can believe all the numbers. We see the negative, the backwardation, the negative gold forward rates at unprecedented rates. We see the soaring gold and silver deliveries out in China, more than all the mine production in the world. And even the Indian government change where Narendra Modi and the BJP party is probably going to get rid of the tariffs, which have slowed down demand there. Again, no one really knows how much gold and silver is left. The Germans are not getting theirs back, and the Fed hasn't been audited in 60 years. So, my guess from what I've seen and, people you've interviewed like Eric Sprott who do the math is that most of it is gone, either surreptitious sales or leases, or otherwise. But, are they going to sell every last ounce? I don't know. And how much do they have left? But the point is, the signs, like the refiners being 100% at capacity in Switzerland 24/7, clearly shows that the level of uptake from the east from the west to the east is enormous. So it's really hard to tell. But again, you're going to see the break between the physical and the paper market at some point, and everyone's going to realize it.
That is the undeniable trend, is that the physical demand is huge. It's going from west to east. It is undeniable. You cannot hide it. That's what you're saying.
I mean, 2008 was the beginning where we had massive dislocations between paper and physical prices when prices were attacked by the cartel during the crisis. But also during 2011, when prices were soaring, we were running out of silver. And then last year in 2013, the beginning of the year, when the mint ran out, and then again when they smashed prices in April, same thing. I mean, we've had like 5 or 6 supply shortages in the last 5 years alone. And, to me, the big one is coming where, there won't be any supply.
Are you guys having trouble right now getting silver and gold eagles from the U.S. Mint?
Right now, we're okay. I mean, it's quite a dichotomy because the Mint, for instance, last year had record Silver Eagle sales while they were smashing the paper price, and this year the pace is far ahead of last year's. But it's not United States dealers. I mean, ask anyone who's in our business. It's not Americans who are buying. It's someone else, and that's why it has to be, in my mind, the Easterners who are adding insult to injury by actually taking half the U.S. Mint's supply of silver.
They're buying the monster boxes. They're buying all the gold eagles. That you're saying this is getting shipped out of the country.
Yeah, it's mostly for the Mint. It's mostly silver, which is clearly far tighter than gold in this country. But you look around the world at the premiums that they have in Shanghai and India. Some places they are having shortages, and then of course all the countries, the emerging market currencies that have had crashes, Venezuela, Argentina, even Brazil, they clearly are, I'm sure, having major shortages over there. So it's very segmented at the moment, but it's focused more in the Eastern Hemisphere. We did have major demand surges in parts of 08, of 11, of 13, and we will again. It's just a matter of time. And each time that we get to one of those shortages, the odds are that they are going to run out.
Very good. And would you like to hazard a guess of where gold and silver is going to end up at the end of 2014?
No, because we don't, Miles Franklin. We're not in the business of predicting. We are in the business of giving economic truth and letting people do their own due diligence. Can I believe that with gold and silver trading this far below the cost of production, with the mining industry on the verge of collapse, and that's not an understatement, and with global demand surging, and the banks like the ECB going to negative interest rates and all these things, can they actually keep the price down here by the end of the year? I would be very impressed if they can do that, but I'm not predicting anything. All I can say is that at these prices, it's hard to believe that there's much downside.
You're talking. You did mining analysis for half a dozen years.
Yeah.
You're saying that the price of silver is what it costs, or it's about what it costs to get out of the ground, or it's tell me about it. It's $19. You're saying it costs them $19 to dig it up and put it into a coin?
Gold and silver are way below. I mean, there's many ways of looking at it. For years the industry would use this cash cost metric, which is meaningless. I mean, yes, if you have a mine already open, it has a variable cash cost. But we're talking about the cost of the entire business. Most companies, if you're talking about silver, there's very few mines in the world left that even have a positive variable cash cost right now, which is why even the best miners are losing money. But you have to talk about the entire cost of the business, the cost of exploration, production, development, permitting, taxes, royalties, tires, crews, all that stuff. And, look, the CEO of Goldfield, which is the 4th or 5th largest miner, said last year, we need a $1,500 price to keep the industry sustained. That's why you're seeing Newmont and Barrick trying to merge with each other, because they're both on the verge right now of going negative. We are seeing 50% capital expenditure reductions right now, and we are going to see, I'm guessing, 20 to 30% production declines over the next decade because of what the cartel has done already.
Unless the price goes back up.
Yeah, and even if it does, I mean, it's very difficult to turn things around. I mean, I do expect Newmont and Barrick to eventually merge, and many others, because they're going to do exactly what happened in the oil industry when I was in it in 1999, when Exxon and Mobil were forced to merge, when oil was $10 a barrel. It's the same thing with gold at 1,200 or silver at $19.
And when oil was $10 a barrel, ooh, those were the days, weren't they? And what happened after they merged? Boom. And you're saying that the setup for supply contraction is already in the works, already contracting. They're trying to look for ways to survive, and the demand is huge, and the supply is contracting. And you're saying you don't know what the price is going to be, but it's going to be higher.
Yeah, and on top of that, we have the same issues that oil had 15 years ago. The low-hanging fruit is gone. This is the most difficult industry in the world. And on top of that, as the price goes up of gold and silver, their monetary aspects cause governments to do things like expropriate and windfall tax. So my guess is production will never recover to the levels it was at a decade ago. And if the price stays down here much longer, you're going to see massive write-offs, bankruptcies, mergers, and the mergers will always result in reduced production as they high-grade projects. So, from a supply standpoint, I think the situation is worse now than it was for oil in 1999.
With that, Andy Hoffman, thank you for taking us to school in the back end of the, where the shovel meets the dirt in the mining industry. Thank you so much for coming on USA Watchdog and enlightening us. Hope you come back.
My pleasure. Thanks.
Okay, hope you come back.
I will, I assure you.